This is Eric Muathe, Muathe.com. Let's take a look at a stock that is down substantially today. And the ticker symbol, CATB. Now the stock is down huge, having gap down, and the gap down was 70% down. Now, of course, nobody wants to be part of this massive plunge. Nobody wants to be part of this massive gap down. Now, what can we learn from this? Well, the first thing that I see is on the weekly chart, there was a failed breakout attempt a couple of weeks ago. In fact, about 2 months ago, right here. So you see a breakout, which was successful in terms of closing above the prior weekly closing high. And then in the subsequent week, it closed back below that level. That in itself was a massive red flag. So failed breakouts are notorious for causing instruments to either go sideways or to experience lower price action. Now in this one, let's be honest, this gap down is aggressive. So we can say that the failed breakout told us that it was going to plunge 70% in one day, but at least we can see, if we look back from a technical standpoint, there was no momentum, because when you try to gather momentum, essentially that red flag was a big deal and the reason for that massive red flag. Generally speaking, the stock has been trading in this range between 9 and let's say 4.5 over the last 2 years minimum. So really there was no momentum to the upside. No breakout was taking place. So there was no reason, in a sense, from a purely momentum standpoint, to be holding the stock here after this failed breakout. This was the big deal. So red flags are there for a reason. Now actually, if we go back, we can see that there was another weekly closing high here. And so we can see actually that the breakout that took place in June was also a failed breakout here, which led to this sideways market before the eventual breakout attempt right here. So we can see that there was another failed breakout right there. No momentum. And if we go farther back in time, we can see another weekly closing high and yet another failed breakout attempt here, which led again to no momentum and this sideways to down price action. So what we are seeing here is that, to be honest, failure to break out, failure to hold high levels, failure to sustain a push to the upside is a sign of an instrument going nowhere. So the moral of the story here is we need to be careful not to be holding on to instruments that cannot hold a successful breakout attempt. Now something else I noticed, if we take a look at all the data monthly, so let's take a look at all data monthly. What we see here is something I talk about often, which is this need to always watch what an instrument has done in the past. And here we can see that this instrument seems to be one of those that just cannot hold on to gains. Every time it tries to move higher, it is followed by a swift move lower. And this has been the behavior since 2015. So in a sense, this drop for the month down 75% is something it's not too uncommon in this instrument. This is Eric Muathe, Muathe.com. Love light, light love. Namaste.